Good evening, everyone, and welcome. It is being called the defining case for the Internet age. Today, the European Union formally accused Google of abusing its dominance in web searches, filing antitrust charges against the company. The agency said Google's methods cheat both consumers and competitors.
Our preliminary view in the statement of objection is that in its general Internet search result, Google artificially favors its own comparison shopping service, and that this constitutes an abuse.
That case could cost the tech firm billions in fines, maybe even force Google to make changes to its business model. And it is drawing comparisons to the antitrust case against Microsoft that dragged on for years. Despite that news, though, shares of Google's Class A shares rose slightly today. Josh Lipton has more on what the charges mean for Google, a stock widely held in mutual funds.
The European Commission delivered a blow to Google this morning, not only filing antitrust charges against the tech giant, but also announcing a formal investigation into Android, Google's mobile operating system. Google quickly shot back.
But look at all the tremendous innovations and evolution that we've seen in the search industry over the past few years. We can't stand still. We face enormous competitive pressure, and we're going to respond to that in the marketplace. Separately, we're going to have a discussion with regulators about how we do that.
This news comes at a tough time for Google. Its stock has gone nowhere over the last 12 months as investors worry that Google has missed the boat in social media and ad dollars are moving to companies like Facebook. Worst case scenario, Google could face a potential $6 billion fine. The company does boast a cash pile of some $60 billion, so that fine, though serious, wouldn't be a huge setback. More broadly, regulators could force Google to make changes to its search business. That could have a chilling effect on Google's ability to remain innovative. Google became the dominant search engine around the globe by writing algorithms that were better than anyone else's. Will the company still be able to innovate? And then there's the potential stock impact. When Microsoft faced antitrust charges in Europe several years ago, its stock underperformed the market. For Google, the stock impact may be more muted.
The irony here is that this overhang comes in when the stock has already become relatively mature, so it doesn't have a dramatic impact on the valuation. If this had happened 5 years ago, it would have.
A final EU decision could come by the end of the year. However, corporate governance experts say Google should resolve this issue as quickly as possible. Otherwise, they say such charges can have an impact on recruitment, employee morale, and brand reputation. For Nightly Business Report, I'm Josh Lipton in San Francisco.